I want to share with you the most important thing I've learned since going all in Tesla stock. If you are new to investing, considering investing, or even if you're a seasoned investor but still struggling with your emotions over logic, I've got two things to show you that really help cut through the Tesla stock despair and hopefully put your mind at ease as we move into a more prosperous future. Hello, I'm Will. Welcome to the Tesla Jigsaw. Let's get one thing straight before we start. I'm just another plonker on YouTube. I am not a financial advisor if you hadn't guessed, so nothing here is financial advice. Do your own thinking and your own research. What I can offer you is sharing my rollercoaster experience of investing in Tesla, in the hope that it provides some valuable insights into what to expect on your investment journey, risk versus reward, the difference between traders and investors, and the importance of a long-term investment strategy, amongst many other things. Let's go for a terrifying journey on the ride of market emotions. There are many versions of this diagram out there, but for me it's one of the most grounding things to understand, as I've gone through every one of these emotions as a newbie to investing, watching my Tesla stock shoot up to the moon, go back down to earth again, and ping pong in between the two ever since. It's been a little unnerving to say the least. This is where my investment journey began at the end of 2019. I could not contain my excitement for Tesla any longer. I'd picked up my new Tesla Model 3 over the summer, and it just blew me away every time I drove it. And the more I learnt about the company and its mission to change the world, I was not willing to sit on the sidelines as I watched what I considered to be then and now the greatest financial opportunity of a lifetime pass me by. I bought my first bunch of Tesla shares, then sold our house, released some equity, and bought some more. Talk about good timing. I went from excitement to thrill quicker than a plaid Model S. Tesla as a company were executing brilliantly. And I don't mean literally executing underperforming workers. Tesla were on track to becoming profitable at last, thanks to the mass production of the Model 3, and quickly followed up with now the world's best-selling car, the Tesla Model Y. Within just a year, Tesla's share price had rocketed up almost 900%. I remember smugly thinking, this investing malark is easy peasy, innit? Oh, how naive I was. With a slightly concerning at the time 34% dip in 2021, Tesla shares eventually found their way up to their all-time high of $407. And that right there, ladies and gentlemen, with hindsight, is the point of maximum financial risk. From then until the end of 2022, myself and other perhaps newbie investors watched in horror as the stock plummeted over 72% to just $113 at its lowest point. Denial, anxiety, fear, depression, panic, capitulation and despondency had taken their toll and shaken out the gamblers, traders, novice investors and way more intelligent folks than me. But here's the difference between those that panic sold during this time and little old me. When I decided to invest in Tesla, I'd done a lot of homework. I knew that the only type of investor is a long-term investor. Anything else in my view is short-term gambling. I'd heard how difficult it was watching your investments drop and understood the lower it goes, the more people panic sell, as they can't bear to lose even more. However, hearing that is one thing, living through it with your own money is another. Now, if you've invested in a company that is clearly failing, it might make sense to do some reevaluating, as there may be no hope of the company pulling through or the share price ever recovering. But if you do believe that the company you are invested in is a solid investment and that it will indeed recover in the future, all you need to do is ride this roller coaster of emotions back up. But that does mean not being ruled by your emotions and sticking to your long-term investment strategy. Definitely easier said than done. Recognising the point of maximum financial opportunity is equally tricky, as it may drop again or shoot up before you have the time to say, I'm an expert in economics, and miss the opportunity all over again. But if you can ride out the skepticism, hope and relief all the way back to where we started, optimism, you won't have lost a penny, and in good stead for riding the next bull market, which we'll get to in a minute. Judging from the 100% rise from the beginning of 2023 to today in early 24, I'd guess that we're heading to the upside, if not already climbing up it. But spoiler alert, I don't know, and nor does anyone else quite frankly. Beware of anyone who tells you otherwise. There is after all only one person responsible for the allocation of your capital. You. But just as this chart shows the reality of dealing with the emotional responses of investing, the next one I'll show you is equally important to understand. But before we look at that, please do hit the like button, subscribe to Tesla Jigsaw and hit the bell for notifications of new videos from me. Thank you, I really appreciate your support. Just take a look at this. It's the history of US bear and bull markets. A bull market is when stock prices are on the rise and economically sound, while a bear market is when prices are in decline. This chart, taken from the first trust, which I'll link in the description below, shows daily historical performance of the S&P 500 index throughout the US bull and bear market since 1926. The S&P 500, by the way, tracks the stock performance of 500 of the largest companies listed on the stock exchange in the United States. By looking at the history of the market's expansions and recessions, this helps to gain a fresh perspective on the benefits of investing for the long term. The average bull market period lasted 6.6 years, with an average cumulative return of 339%. The average bear market period lasted just 1.3 years, with an average cumulative loss of minus 38%. There are a few lessons to be learnt from this. The first is that you make far more money by holding through bull markets than you lose by holding through bear markets. So anyone willing to invest for the long term in the S&P will outperform those who don't. Second lesson, there is always a bear market coming, meaning people can always be found pessimistically screaming from the rooftops that it's coming until eventually it does, and they think they're geniuses for calling it. Likewise, people will think that they know when the market is at its peak. You might well see indicators of pullbacks, recessions, but how smart do you think you are to time that? Trying to time the market and sell at the top of a bull market period, then buy once at the bottom of a bear market is a gambling nightmare. Are you at the top? Are you sure? Maybe you sell just here thinking there's no way it's going to outperform the last growth period. Whoops! And same goes at the bottom. You might just buy in before it drops further. What a stressful, time-consuming, emotional plan that is. Thankfully, I know I'm not smart enough to play that game, so my approach since day one has been something like this. Understand as much as I can about Tesla, the company, and its future. Only invest with money that I don't need on a day-to-day basis, and don't even think about selling for at least 10 years from my initial purchase. As Warren Buffett once said, time in the market beats timing the market. Pretty wise words when considering both of these charts, eh? So as a novice investor, I'm not going to lie, it's not been easy or nice watching all of my gains plummet back down to almost the same amount of money that I originally invested with. But it's way worse for some folks who invested everything they had at the point of maximum financial risk, and will need to ride out the investor emotions rollercoaster for possibly some time to reach some gains, or worse still, sold right at the bottom and lost over 70% of their investments. Ouch! But during this Tesla time of reflection, has anything changed in my future outlook for Tesla? Yes, it has. I assumed other legacy car companies would be ramping EV production to millions per year by now. Nope. Just BYD from China, who are doing a cracking job of carrying some EV manufacturing burden off the shoulders of Tesla, whilst legacy auto companies are cutting back the production of their EV offerings because A, they haven't managed to make them profitable to build, and B, people are noticing that a lot of them are a bit, how to put it, poop. Now I know that's not all EVs, there are some great contenders, but not when weighing up the sales price, the value, safety and profit margins of other EVs when compared to a Tesla. Not even the mighty BYD can come anywhere close to Tesla's profit margins. What's my investment plan now then? Well, continue buying more. There's a Tesla stock sale on. My outlook for Tesla's future has only grown as they have proved time and time again to be the most impressive, innovative, problem-solving leaders in the EV space, whilst also growing to dominate the energy sector, robotics, AI and much more. As Tesla enters its 21st year, it has matured from the king of EVs to leaders in the auto industry as a whole, and quite frankly, embarrassing the big boys with their capabilities. Currently capable of pumping out 2 million vehicles a year and growing, which is not far off the size of BMW for comparison. Tesla not only has some of the greatest profit margins per vehicle sold, but is continuing to drive down its manufacturing costs, plus increasing efficiencies, offering more value with their cars than anyone else, thanks to over-the-air updates, industry-leading software, self-driving capabilities, etc. But as a company, Tesla has barely any debt. Compare that to Volkswagen or other legacy car companies, which is beyond shocking. Tesla also sits on a rather healthy $26 billion of cash and has more than enough money to build multiple factories, more Cybertruck production lines around the world, and invest into anything it sees fit, like lithium refining, battery facilities, and even one of the world's most powerful supercomputers in order to train its self-driving system. Cash on hand is not an issue for Tesla. And that's before we even get to future revenue streams. Software as a service will be gigantic. A simple over-the-air update that will one day allow all Tesla owners to subscribe monthly to make their cars truly, fully autonomous. That's practically a 100% profit return for Tesla, because it's just software. Further subscriptions to more advanced gaming and streaming services, let alone a future robo-taxi network to earn you money whilst your car is not in use. Then there's Tesla bots and all the craziness of imagining Tesla's revenue stream from manufacturing and selling useful humanoid robots to factories and the general public someday. I'll stop there before I get too excited, but from my point of view, the risk versus reward of investing in Tesla is pretty obvious. I'm not taking the risk of missing out and investing in what I believe will be the largest, most profitable company on earth. And in my mind, that's just a matter of time and patience. If you want to know more about Tesla's growing achievements, take a look at this video right here, which quickly highlights where they are at the end of 2023. The evidence speaks for itself. A huge thanks to my Patreon supporters who are keeping me going. If you'd like to help me out, please consider joining using the link in the description. Do like and subscribe if you haven't already. I'm Will, this is the Tesla Jigsaw. Thanks so much for watching. Bye for now.